Hey traders, this is Ron Haidt at Market Tamer. I hope everybody's having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow, the DIA. Now, I haven't done videos this week. I've been out of town in Orlando on business. I'll be back home over the weekend, and we'll get back to a normal schedule this coming week of a video Sunday through Thursday nights. But right now, where we sit on the weekend, the pullback was basically over in a matter of 2 days. Once we got below the red line, which is the 20-day EMA, we've turned right back up. The 5 and the 20 are both pointing higher. We're above the 5 and the 20. Again, 5 days blue, 20 days red. So the outlook for this week is bullish. The bulls have regained the edge. If we get back below, and I'll zoom in a little closer, the blue and the red, then we would go back at best neutral, but short-term bearish with a target of the 50-day in orange and the 200-day in purple, which are both institutional moving averages. So right now, walking into Monday, bulls have the edge on the dailies. And remember, the weekly charts that I did a week ago, they never went bearish. It was only the short-term dailies that began to start to roll over. We take a look at the SPY, S&P 500 ETF. We've already closed back above the previous highs. I mean, that's pretty amazing. We had a little 2-day dip, and then boom, right up we went. And noticed where we stopped. Right on the 200-day moving average back on the 8th, a week ago. So that's going to be a key marker in the sand. If we were to roll over this week or whenever, and we start coming back down, we want to watch the 200-day. And I'll tell you what, in probably another week or so, this 50-day is going to be up there too. And remember what makes the 50-day and the 200-day so important to chartists. Those are institutional moving averages. So if they come in and create some confluence, which they're about to do, they're about to join up and make a sandwich. When you cut through both, it's an even bigger deal and it's more noticeable. So we'll just keep an eye on that. We take a look at the Qs. They had a nice day on Friday. They took out the previous highs. Geez, back on Wednesday, Tuesday already. Their target is the all-time highs. That's where that is, up at 186 yet. All right, now take a look at the transports. I know I brought in the semis, the banks, and the trannies about a week ago, well, last Sunday. Some of them are responding, but the transports aren't. And there's often, they'll often say, well, if the trannies aren't supportive of the market can't really go higher. It's not exactly true. Well, it's not true. The market can do whatever it wants. But they like to have that correlation where the banks and the transports and the semis, they're all going up with. This would be a bit of a divergence, but right now it's really only the trannies. So maybe that means to those folks that follow that we're not going to blast off. But the bulls are winning. When you look at the major averages, the bulls are simply winning. And the transports, they're not even back above the 200-day. They're not even back above the previous high yet. So that's definitely a lag. Now, Apple was in the news. It got an upgrade. That sent the stock popping here, which would have been on the 11th. I commented about that. Target was the 200-day. We're there. We're within a couple bucks of it. Above the 200-day, there's another gap to fill up around 203 and then back up to the ledge at 210. Apple here is technically bullish. Stock I told you guys to keep an eye on was NVDA, NVIDIA. I wanted to clear some of these previous highs at the very least. That began to occur back on Wednesday. You could argue maybe Monday, Tuesday a little bit, but Wednesday we got above it. I like how the volume days are higher on black days, which black is up, red is down. So when I say the black bars are taller than the red bars, the bulls here are winning by volume. Gap fill essentially is the target up around 200, and then the 200-day too. So still some nice technical upside targets there. Not saying it's going to get there, but that would be the upside technical target. Facebook, just stunning. These guys just can't get out of the news with all these deals that are being reported that they're not doing that are just privacy issue deals. Problems all around. The stock I talked about in here had a very controlled pullback. Look at the light volume. And then we started to bounce on a little stronger volume. And then Thursday, Friday went right back down. I would say right now on Facebook, I would just urge caution. I mean, they have so much money they can basically buy everybody off. If you don't believe that, well, welcome to the world. With that much money, that's what they all do. They buy off Congress, they buy off everybody, and then problems magically go away. It's sort of range bound. So I'd be careful here. If I don't have a position in Facebook, but if I did and it was a whopper, I think at this stage, I would just, for my sanity, my ability to sleep at night, I would want a long-term long put, maybe even a lead put. And then when the stock's acting like this, where it's range bound in that box, Maybe consider covered calls, up near resistance, which is around 175. And maybe try to do those weekly or bi-weekly or maybe even monthly. Now, typically what I would do in this example as I would teach it, for every 100 shares I have, I could sell to open one short call contract. I don't have to. I could do ratios. Let's say I had 500 shares of Facebook. I could do 3 short calls, leave 2 uncovered, so infinity would be the max reward figure, or I could stagger them, different strikes, different expirations. But I would, if it was a larger position, I would not be able to sleep at night knowing that anything could really whack this stock hard. But given what they do, I'm still long-term bullish on them. Now, Checkpoint Software, I had a question on this one. We talked about the seasonality play, wait for January. Wait. You get through earnings, and I already showed you this example, so I'm not going to bore you with the details. And we saw this option over double. I mean, I forget the number because I'm traveling, I'm in a hotel today, but it was incredible. And this was just straight up. You're talking around 110 right up to 122. 10% moves on stocks of this value often can, not always, produce triple-digit potential returns. And the example I gave you guys did. We then got below the 20-day, and guess what? It went right back up. And that's okay. But the seasonality window, all we did was wait, pop in volume above the 50-day, game on. So I don't have time to do it today, but here's what's going to happen. In Monday, keep an eye out for the video. I'm going to be putting on see the next group of stocks set to soar and crash. It's going to be free. I'll unveil the next hottest stock lists. I'll make sure there's going to be a link at the bottom of the video on Monday when I'm back in town, and the email that I send out, whether you're at Market Tamer or if you're at Financial. So you definitely do not want to miss it. I'll go over the top 10 stocks for the weeks ahead, and I'll also show you some of my favorites as well. It'll be completely free, and like usual, literally within about 3 minutes, 4 minutes of going live, you're going to have that hot stock list. So it's not some kind of long presentation you have to sit through. This is incredibly powerful information. It is what the institutions are aware of, and I'll share that with you. I don't know what day we're going to do the webinar. I'm thinking Thursday, but again, I'll have that all scheduled when I get back in town late Sunday, and I'll send y'all emails, and I'll put it in the videos on Monday for sure. And one last question. I had something, there's actually a couple. Somebody asked about ZN, just my technical outlook. I have no idea about the company. I don't know if I've ever looked at them before, but Z is in zebra, N is in Nancy. If I zoom in here, there was a big surge in volume. Friday was only 700,000 shares, and it's less than $1. It's back below its 5 days. So if this was going to be a surge and something I wanted to play maybe via momentum, I would want it to stay above the 5-day EMA in blue, short-term trade. It didn't happen. So if I was trading this back below the 5-day, it would be over as of Friday. And the other interesting thing is the gap down, which occurred around, let's say, $1.20 down to 50 cents. It lost over half its value. That surge on Tuesday, it filled the gap. It met the price criteria. So now you might go back up into this ledge area around $1.50 as the target. And that's where the purple line is, the 200-day. But here's the problem that I see. You had this spike up already. So this stock would need to get back above the 5-day. That would be a mini short-term buy signal. But I would then want it to close above the previous closes, which is around $1. So then you're really playing about $1 to $1.50. This is a 50% price differential. But given how this stock can move, that all could be over in 1 day. Those are some things to keep an eye on. And then I wanted to show you these guys. I almost forgot. Here is AMAT. Keep an eye on this one. Nice surge in volume on Friday. We got back above the 200-day moving average, which is something we haven't done since May. It's been flirting with it in February and March. The upside target, I mean, if you wanted to wait, let me zoom in here. If you wanted to wait, in my opinion, the close is 40.64. Let's do 41 bucks. If this stock would close at 41, the technical target would literally be the gap fill, up around 47, 46 something. 15% move there. MKSI had a move on Friday as well. It not only regained moving averages, closed above the previous high. I mean, the next target, 100, 15% or 13% higher. That's pretty steep. Nice big potential. BBBY, which is Bed Bath & Beyond. This one rolled over. Closed below the 50-day, closed below the previous horizontal support here after it had the big earnings move sideways. It gave it all back today. Today, meaning Friday. But there wasn't a massive spike in volume, but it did close at the end of the day. Target's going to be a gap fill back down towards 12, 15% lower. So all that move up is now being, given back. And technically, there's your target. So that is it. A little bit of a longer video. I'll be back home to start doing videos on Monday. I'll let you know about the seasonality webinar. I'm going to show you these hottest stocks for the weeks ahead. These are proven based on the stock's entire track record. It's going to be exciting. And once you see this information, even if you've seen it before, you're never going to pick stocks the same way again after you see this. This is that powerful. Wish you guys all the best. Hope you're having a fantastic weekend, like I said, and I'll see you in Monday's video. Take good care.